Welcome to December. This is Steph from the Swiss Wolf. Today I'm going to cover a bit of the market, give you a little update of where we stand, where I think we might go from here, and why we are at a pretty important decision point. So, we had a weekly candle close, we had the monthly candle close. Let's look at this. I'm going to break down the TA side of Bitcoin, of Ethereum, and also show you what is supporting that decision on Bitcoin. So first of all, the monthly candle. We had a bearish candle. We had a pretty big wick on that candle, which is good. I was hoping we would get a wick similar to this because a very bearish candle without a wick is not a good sign. If we had something like this is called a Morobuso candle with no wick at the bottom, then it's almost a 90% chance that we continue dropping. But because we have this big wick, now we have good chances of finding support. It is bearish, it's not bullish, yes, that's a fact, but it doesn't mean that this is the beginning of the bear market. And I've seen so many people saying that they called the top, they told everyone to sell here. Yes, of course, if we would have sold there, we could have benefited from the lower prices, but it doesn't mean that the bull run is over. On the weekly, we had a doji. So doji means indecision, accumulation. The market had a bearish move, had a first slowdown because you could say that 50% of the candle is a rejection and 50% is the body. So we came down to this level, had a slowdown here, second week showing a doji accumulation. And also the very interesting thing on that is that we had high volume. If you look at the volume, it's almost the same volume as what we had in a very bearish week. The difference is that we have half body, half wick. The slowdown is confirmed with a way lower volume here on the second week. And that indicates what? Bears push price heavily down, then they slowed down, bulls took over, they absorbed all of that bearish move, and they found support here. If we have again low volume and a strong move, it shows that bulls didn't need much strength to push price higher. That would be the ideal, that we see not very high volume this week, but a very bullish move. So that would show the exhaustions of the bears. That confirms as well that we have a very high likelihood of coming higher again before anything happens on Bitcoin. Even if we were to go into a bear market, which I don't believe so, it is still very likely that we have some sort of pullback, like a relief rally. And if we were to go into a bear market right now, it would force or make investors FOMO, buy prices high, be a bit of exit liquidity, and then going down. I do believe we're going higher because, first of all, most of the people expect that bearish move. We're very low on the crypto fear and greed index. And when the whole market is super bearish, super afraid, ready to sell, this is when usually I tend to go for the opposite. As I said before in my previous videos, I am going to prepare for a down move where I will hedge a portion of my portfolio because you can never be sure of just one outcome, but I'm very bullish. What do we have as a support here? We have the weekly support, which is right there. We came down, retested it, had a double bottom, broke that neckline, and now we're retesting that double bottom that we had here. It's not a perfect double bottom because the second bottom is a bit lower, but in TA, it's not always textbook perfect kind of pattern that you look at. We have the support here, the weekly support. We have the support from this trend line. And then most importantly, we have, if we take swing low to the swing high here, we are at the 78.6% level, which is that monthly level. It is very important that we stay above this level. Previously, if you look what we had in the bull run here, so we had a swing low, swing high, had a retracement, went to the second extension, and then when we came back, so if I readjust it to the new swing low, the new swing high, we had rejection around this level, but then we broke below, and this was the beginning of the bear market. We are currently at the level that should and has to hold. So there is very strong support at this level. And It's kind of a decision moment where we need to see support holding, bulls taking over, bears being exhausted, and so far we're seeing it. Even if we step down on the daily, we had, so if I remove this, we had the fake out of this weekly support, and now we're retesting that faked out support, which in most cases leads to a continuation of the move. On the 4 hour, you can see that we had sort of a morning star around this level. Now, what we need to see is price continuation. It is also on the low time frame. If we take swing low to swing high, the 70.5%, which is a very high liquidity level in most cases. So there is support from the monthly to the 4 hour time frame. Now we need to see these level continue. Above 92K, which is the biggest resistance that we have right now, is where we turn bullish. Not on the daily. On the daily, we still need to go above the 105K to turn fully bullish. But at least on the lower time frame, we're starting to turn bullish. So in terms of structure, it's bullish. High time frame is very bullish on the monthly. If we look at Ethereum, it's at the same level. On the monthly, we had a bearish candle, but we're still within the 61.8% retracement zone of the fib level. And it's normal to have these pullbacks after such a strong move. It's not something that's fully unexpected, especially when institutions are involved. They're drying up the supply. They want to get the best prices. They don't want to buy it 5, 6, 7,000, for example, on Ethereum. We had that rejection here. Monthly was bearish, but the weekly is the same as Bitcoin. We are on a strong support. We had a very strong demand zone. So a demand zone is where we had a move, a slowdown with a very strong accumulation that we can see in the form of the dojis. Then we moved out very strongly from that zone. Once we come back, very often we have a pretty big rejection. And this is exactly what we're seeing right now on Ethereum. So the weekly is showing the same thing. The daily is showing very similar price action to Bitcoin. We're seeing that retracement, the fake out, the retest here, and also Ethereum Bitcoin is gaining some strength again. We have been consolidating kind of in a compression move here. And I'm saying it's a compression because you have lots of dojis and prices moving very slowly and not much. If you look at historical patterns, you can see we had something similar here, then we exploded. And here it's sort of a compression as well, but the moves were bigger compared to this one here. And this usually leads to an explosion to the upside. So that would take Ethereum to a new all-time high, probably $6,000 to $7,000. If this fib level plays out, then it's very likely we're going to at least $7,000 on Ethereum. And the S&P is also showing pretty strong signs of support here. We had a very strong bullish engulfing on the weekly, and on the daily you can see we came from the lowest level to the highest level and broke that kind of lower high here. This is called an impulsive break. When we have higher lows and higher highs, every time we go above, it's a break of structure. But if we have something like this, then we come from the lowest point and break the highest point. So we took all of those lows and those highs. This is called an impulsive breaks. And these are very strong because we came from the most bearish point and took out most of the highs. If we continue here around and take out this high, then it would show a very strong move from the S&P. Right now, we took this level out. We're close to taking this out. So we didn't take all of the highs out, but we took the first one in that case. If we take the second and the third one out, then it's a very strong sign that would push Bitcoin as well, because Bitcoin is very tied to the S&P, the stock market, also following liquidity waves, of course. And in all this uncertainty, alts did take a hit. This is translated into the bullishness in the Bitcoin dominance. We did have a sort of a pin bar here, but it's not on support. So it doesn't mean that alts are completely dead. I know that lots of people are saying that anyways, there's not going to be an alt season, it's over. But personally, I don't agree because once FOMO kicks in, there is almost nothing stopping it. And we've seen it in coins like ICP, where we had almost a 300% move in about 2 weeks. I would say we are having a retracement coming down to past the 78.6% level. We could come back a bit lower. It will mainly depend on Bitcoin, of course. But this is just to say that when FOMO kicks back in, because most of the investors didn't sell their coins for fiat. They left it in stable coins. This is something that I showed you, I think, in the last video with the stablecoin supply ratio. It is very low, meaning that there is lots of USDT or USDC or any other stablecoin available to be deployed at any moment. Now that we've looked at the chart, so we are in support, very strong, holding very well. Now let's look at what the data is saying. Bitcoin Exchange Reserve. We did have a massive drop here. After investigation, it seems like it was some reshuffling between Coinbase and MicroStrategy, I think. They moved custodians. So it's not a massive drop that actually happened. It's just a kind of an internal move. But the important thing is that even if we take out this move here, we're continuing to fall, showing that we are drying up the liquidity, and it's not like everybody's selling spot. This is mainly futures driven. Next is the balance on accumulation addresses. Have they been selling? Not at all. We're continuing this exponential growth since beginning of the year. It's not stopping. We are on support right now and whales are accumulating. And if we look at the inflows in the past 30 days, even more, you can see that they are buying immensely. It's not just a few Bitcoins here and there, buying 10 Bitcoin, hundreds of Bitcoin. And the funny thing is that most of the people are talking about, oh, this OG whale sold 11,000 Bitcoin. This is bearish for the market, but they don't really talk about the days where we see 30K, 40K inflows in a single day. And that accumulation has been growing since mid-October, beginning of November. We're seeing levels of accumulation that we haven't seen for this whole cycle. Then there is Ethereum. What are whales doing with Ethereum? Well, they're drying up the supply just like for Bitcoin. We are at an all-time low this cycle. And just like for Bitcoin, supply is drying up. And what does this mean? This means that when retail comes back, when they want to get Ethereum, they will have to fight for a lower amount of supply. So this will drive price higher quicker than if there was 22 million Ethereum ready to be bought. Right now we only have 16.5. It's low, the lowest this whole cycle, and the market is still mostly short in terms of futures. There's around 15 billion to be liquidated at 100K, which is not very far from the current price. It's always good when we are in support to have more liquidity to be grabbed on the way up than on the way down, because usually market makers go for that liquidity. They go grab this, hit the stop losses, and then take all the money. We're seeing something similar in the ETF side. We did have a pretty big sell off, yes, when all that fear kicked in. But at the same time, we're seeing a slowdown and a reversal. Very slow reversal. We're still seeing some selling here, but at least it's not a massive sell. And the important thing is not to see a sell off in a week or a couple days. Is it's if we had a sell off for 2 or 3 weeks, constant sell off, sell off, sell off on the ETF side, then it would show more a distribution before a further drop. But we're not seeing this at the moment. What spooked the market also in October was when we had the FOMC. Powell hinted that it was more unlikely that we were going to have a rate cut than likely. And of course, the market did not price this in. They were pricing in a further rate cut. And because markets are forward looking, they then priced it in, no rate cuts, and we saw this bearish move since then, actually. But what investors underestimated was the weakness of the job market. It's not what the Fed is pretending it to be. And now that the data came out, and now that Powell is changing a bit his tone, the market is repricing the likelihood of a rate cut. And I know that some Fed members are talking about even a 50 BPS cut, that they would vote towards it. Right now, it's only 25 BPS that's priced in. So imagine if we get a surprise rate cut of 50 BPS, it is next week, it's going to have a huge impact on the market. And we also officially had the end of QT. It doesn't mean that we're going into QE straight away, but it also means that the next step from this would be QE. So if we have a 50 BPS cut plus the announcement of QE, that would be a lone catalyst that can completely turn the market and make it super bullish and give us that out season in 1-2 months. One of the things that I think also most investors forget is how quickly the market can turn. If we take the example of Algorand at the beginning of this cycle, October last year, in just 4 weeks, we did roughly a 6x. So imagine with the easier conditions, and we were in full QT at that point. So imagine if we have a reversal here, we have QE, lower rate cuts, liquidity that's being injected, we can do a 10x within 2 months. And that would take a lot by surprise because almost no one is expecting this at the moment. And the market usually tends to go with the least expected outcome. This is why I still think that it can come very quickly, take everyone by surprise, and also leave everyone behind that were in full stable coins. And when they see this price, what usually kicks in at that moment is FOMO. And FOMO has no limits, where even if a coin has pumped 200, 300%, 400%, they will jump in and make price go even higher. And there's also an article from CoinDesk published on the 27th. Bitcoin whales return to buying for the first time since August as price recovers above 90K. It's not the first time, I would say, they have been accumulating, but that's also some other confluences that confirm that whales are buying at the support we are at right now. And this just adds a confluence to what we're seeing on the chart. It's always important to not use just one indicator, not just use one support or one resistance. It's always good to look at the broader side of things and think, okay, what is confirming or talking against my possible outcome or what I'm thinking about the market? Right now is that we're in support and we have quite a bit of confluences showing that this support has a high chance of reversing here and holding. Because I'm going to state the obvious again, at any given time in the market, and I think this is something that people might forget. At any given time, we can go higher or lower. It's the most basic, obvious thing, but I think people forget that when they look at a chart, when they look at a coin, when they analyze something, they don't keep it in mind. Then, once you know this, you have to decide, okay, what makes this side more likely or this side more likely? If I have 70% of chances going higher and only 30 to go down, then I'm going to go with the higher ones, not the lower ones. So right now, I would estimate the likelihood being 70 to 80% that this support here holds because we have quite a bit of confluence and the market is forward looking. They're looking at the FOMC event that's coming, at the liquidity that's being invested around the world, and I think very soon the Fed is going to start. And that brings me to Natasha's question last week. I was thinking that the liquidity would not have had a chance to come yet, so do you think it will be pushed higher by institutional money and therefore any out season would also be altcoins that institutions are buying? Would love to know your thoughts on this. The thing is, markets are forward looking. So if liquidity is announced, expected, and QE is going to start, even if it's announced to start in March next year, because these markets and any market is forward looking, they're going to front run this liquidity. And then once that liquidity actually comes to the market, it could be sort of a sell the news event where people think, okay, now we got the liquidity, everything is going to pump, and everyone is putting money in the market. So when the expected liquidity hits the market, I'm going to be very careful because if you think about in terms of market maker, you want to sell billions of Bitcoin, of Ethereum, well, retail needs liquidity to buy this because for every buyer, there's a seller. For every seller, there is a buyer. So I'm just being mindful about the fact that when the liquidity comes in, it might just be for retail to become exit liquidity, which is sad, of course, because we're all here to make money. But the sad truth is that exit liquidity is needed for people to make money. And about the second part of the question about alt season being only driven by institutions buying certain alts, I don't really agree with this because if you look at Dogecoin, if you look at Shiba and coins like that, retail sometimes is enough to push a coin up 5x, 10x, or anything bigger than this. The thing about institutional money is that they add buying pressure to it. They don't remove it because retail is still there. Retail is still going to buy out. They're still wanting to make a 5x, a 10x on any coin. And if you look at ICP, we didn't really have institutional money buying. We don't have an ETF, for example, but we still saw what is it, 250% move from the bottom. So we don't necessarily need institutions to have an alt season. We've had alt season before institutions were on boards, and the institutions and ETFs are only adding the buy pressure, pushing prices even higher, in my opinion. So, if anything, I think they would make the alt season even stronger. So, I hope this answers your question, Natasha. If you have any more questions or if I didn't fully answer, let me know in the comments. I'll gladly readdress it. And I'm also doing a giveaway of the private community, the base level, which is the highest level. You only need to follow me on Twitter. It's that Swiss Wolf. Like the pinned post, retweet it, comment, and then I will pick a winner by December 8th. I hope you guys enjoyed the updates. If you did, like and subscribe. I'm going to post on a weekly basis updates. I do a full breakdown in my private community with different coins, different alts, and lots more data that I look at to know what is a possible support, resistance, and what is the next possible move. So if you want the full experience, you can join me in the private community. The link is below. I hope you guys have a great week, and I'll talk to you soon.